really begin the conversation with that narrative. A lot of adjectives sort of come to the fore, that you have to be anti-fragile, you have to be resilient, you have to be open to quarter scrutiny. But how many promoters in India are really sort of ready for that? Chakri, great to be connecting with you again. It's been after a while. But let me begin the conversation with you, Chakri. And you really have a finesse in especially the mid-market, small market space, to what you do at TCG. How many promoters and entrepreneurs do you really think in India understand that the real game actually starts once you have crossed that IPO line? Yeah.
Hello, Surja. Nice to connect. And thanks for having me. And I think, India is at the cusp of phenomenal growth in the number of entrepreneurs and more evolved entrepreneurs in the current space. And I think, the business models also are the flow of ideas, versus 25 years ago when I started in this business to now, the flow of information is far faster. If something happens in the US, technology-wise, what happens in any space for that matter, the flow of information to the other markets used to take far longer time. And so that faster movement of information can lead to more evolved business models being more evolved and localized or adapting to fast changing conditions. Now, I recall that, when I was in London and one of the anchor investors of Google many years ago. And at that time, when, you had two phenomenally brilliant founders who decided just before the IPO that they were not the guys who are going to face the public markets. Yes, they were going to be involved in running the company, coming up with these ideas, innovations, but they were not going to be the front face of the company. And they hired Eric Schmidt, who did a phenomenal job in on one side talking to the founders, on the other side talking to the public markets. I think that realization is something which will happen over time. On the other hand, the flip side of this other example is, for example, Bill Gates or Mark Zuckerberg. These are not only brilliant founders, but they're also brilliant faces in communicating that message. It's a very different messaging when you're in a private company versus a public company. So I guess the founders of a business need to have that self-realization that, hey, you know what, I can be both, or I need to step back at some point. So I think, and as a business scales up, it depends upon where you are versus Facebook started off as a social platform for a university. From there, when it went to a global scale, the kind of reach, or rather the business model has to evolve. So it is that realization with both investors, whether, hey, does this founder have that to take the company to the next level and beyond, and for the promoter himself or herself to understand. I think that is a key for success.
Thanks for that, Chakri. That's very well put. I like the Google example, when the founders took this conscious decision that perhaps they are better at building the product and global domination for search engine, and perhaps the business side would really be very well enabling the hindsight managed by Eric Schmidt. I also want to come to you now, Chakri. We just heard from both the entrepreneurs right now, Happiest Minds and Latent View technology companies. And one of them also actually sort of went IPO during the COVID scenario. When you look at the larger capital market stack that you're seeing right now, this entire moot conversation, the journey after the finish line, what really are the observations that you can draw in terms of either price volatility, communications to stakeholders, changes in the guidance, and just the sheer fact of this new age entrepreneurs being very open about this quarterly scrutiny? What really is the sense that you get?
Yeah, sure. Yeah, here there are two ways to look at it. One, clearly, it's most important that a company's value system, ethics system, governance, and these are all key for long-term sustenance. And so those are kind of the must-have for a successful company to grow and evolve over time. And then you deal with randomness. A good company also deals with randomness. Now, Netflix, 3-4 months ago, its market cap was about $300 billion. ExxonMobil, the oil company, was also about $250 odd billion. Then, 3-4 months later, Netflix lost a few subscribers. Still excellently run company. Its market cap has fallen from 300 billion to about 95 billion. That's a 70% drop. They've executed well. They've done all the right things. They've checked all the boxes. There is some growth, slowdown of growth. ExxonMobil, on the other hand, from a $250 billion company, then thanks to the Ukraine-Russia war, its market cap jumped from 250 billion to 350 billion over the space of 3 months. Now, here you have a company, now Netflix, an investor who has invested somewhere from about when it was 300 billion, now needs to wait for the stock to go up, or the company's valuation to go up 3 times. The fall was only 70%. It now needs to go up 3 times to go somewhere close to wherever the investment was. Now, that's how brutally things change in a public market, however well a company is run.
Absolutely.
And then you have a company's, now a 90 billion has to do an extra hard work. Now, tomorrow when the company goes out to raise capital, yes, it can cite various reasons for the market fall, but still it is a factor when next time they go out to raise capital. There are certain things which you cannot control, like the Ukraine-Russia war, and there are certain things which is, for example, subscriber growth in the case of Netflix. Not that it can control it. Yes, it can do a good job in attracting more subscribers, but the communication and the active management of that communication in the right way, in the right spirit, also plays a very important role.
Thanks for that, Chakri. That's a very important point. But Chakri, let's talk also about the bad and the ugly part, which comes to the fore. Really, you spoke about one of them is about dealing with randomness, where perhaps we have not necessarily seen leadership in few of the cases not necessarily emerge stronger as it's coming out. What really are the other cases? I mean, corporate governance definitely seems to be one, especially which we're seeing with albeit in the larger companies also. So in this entire talk about the journey after the finish line, what are the 5 key things that I were to ask you specifically one has to definitely keep in mind? That the journey has not finished with the IPO, it actually has begun.
Indeed, Shirja, I think the journey does begin after the IPO, because the runway is infinite, depending upon a company's imagination to grow the company, reinvent itself, and reinvent itself over time. If you look at some statistics, if you look at the last, let's say, 10 odd years, some nearly 550 companies. It's good to understand the numbers. We all know the numbers, but with about 550 companies were listed, out of which some 62% of them do not trade anymore. And another 15-20% is actually down about 80% from their listing price. It's only about 15% which have actually are above their original market price. These are the statistics of Indian IPOs over the last 10 years. Now, this is true across investing, because, if you were getting a perfect score always, then there's no such thing as a failure. Everybody is succeeding all the time. So what this tells is basically, once a company reaches an IPO line and thereafter, you see only 15% of them actually succeed. So the picking the right company with the right values, with the right business model, and evolving itself over time. Now, Microsoft today is a very different company than what Microsoft set itself out to be several decades ago.
Absolutely.
Reliance Industries was an oil and gas company less than 10 years ago. And today it's a company which is growing in brand new businesses, whether it's telecom or retail, today green energy. And so a company's journey is not constant. They constantly need to reinvent themselves. And I think that reinvention doesn't happen every quarter, it doesn't happen every year, but it happens continuously over time. And the public market constantly evaluates, reevaluates whether, and when this whole talk about whether a company meet expectations or beat expectations is not really about that. It is about demonstrates a company's ability to control the levers within its business. Yes, there are a certain amount of randomness outside, but outside of the randomness, are they effectively managing the levers to grow faster than their own sector, faster than their own competition? And as technology, business conditions, etc., change, does the company have the ability to continuously reinvent itself over time? That contributes to the longer term success, as we've seen, when less than 15% of them actually succeed in the public space. I think keeping that is an everyday journey. You constantly talk to company CEOs, CFOs, management, customers to see whether this company is making that journey. Xerox is a good example. At one point, it was the market leader. Then new kinds of businesses came in. There was no real need to Xerox a document anymore. The company does not exist in its original form. At one point, it had the major market share. The reason is rest of the competition had died out, had fallen out, or decided not to invest in that business anymore. And today, that company doesn't exist in its original form. We still use the word Xerox as a generic word. So that differentiation is very key in the continuous success of a company once it's public.
That's very well said. About only 15% of companies are those in the entire stack which actually emerge stronger. These are hard-hitting facts. And I completely agree that reinvention is the name of the game. Those organizations which have tried to defend and extend themselves, we have seen the might that they have faced. Look at BlackBerries or Nokia, or some of those organizations were so big at one point of time as to where they are now. Until I see you next, goodbye and good luck. And thank you for joining in, Venkatram and Chakri and Rajan. It was really wonderful talking to all of you. Bye-bye.